The wine industry is not simple. It is incredibly complex and full of nuance. It is capital intensive, seasonal, regulated, inventory heavy, and cash flow sensitive. Yet far too many wineries are still relying on accountants who treat it like a generic small business. Or worse, they're just using a relative because it costs them very little. By the time most wine owners consider a change, the damage is already done. Poor margins, incorrect inventory valuations, distorted cash flow, and complete lack of visibility into what actually happens inside the business. Cleanup is expensive, and if you've been relying on somebody that does not understand your industry and is able to prepare financials in a way that allows you to make better business decisions, you're putting yourself on the back foot, and there's a high probability that you're making poor decisions. If any of this sounds familiar, it's likely a serious operational and financial risk to your business, creating a lot of major frustration. Here are 5 reasons why you should consider changing your accountant today. Poor communication. Slow responses, inconsistent updates, overly complicated answers that never really truly addressed the question being asked. Silence when decisions to be made quietly, and just a real struggle to get hold of them. In a winery, timing is everything. Harvest decisions, production planning, contract negotiations, hiring, funding, and purchasing inventory are all time sensitive. If your accounting partner cannot communicate clearly and consistently, you cannot make confident, informed decisions. Strong communication builds trust. Poor communication destroys it. If you don't feel absolute trust in your accounting partner, you do not have a real partner, and you have a weak link in your operations. Good communication should not be a negotiable. It should be an accepted norm. Outdated technology. Outdated systems are not just inconvenient, they can actively harm wineries. Without modern, integrated cloud-based solutions, you face delay or inaccurate inventory data, disconnected production and financial systems, increased compliance risk, data security concerns, limited team access to real-time information. Protea trusts QuickBooks Online and is a clear step ahead of desktop platforms out there. It is more secure, accessible, collaborative, and scalable. Desktop can be expensive, restrictive, challenging to work with remotely, and rapidly becoming obsolete as Insured continues to invest heavily in cloud technology. To run a modern winery, your accounting partner should be confidently using secure client portals, QBO, Innovent for winery operations, as well as many other great technology partners support bill pay, payroll, as well as their own operations. Technology is not a nice to have. It is essential for accuracy, visibility, compliance, and protection. If you want great security, access to your information that you own, insist on using a cloud platform like QuickBooks Online. If your current firm is resisting modernization, they're holding your winery back and very likely holding you hostage. Find a partner that is not scared of technology and uses it to provide a better work product and add value to you as their clients. They only talk about taxes. Yes, taxes do matter, but they should not be the primary focus of your business. We do not go into business to pay as little tax as possible. We go into business to be successful, build a brand, and build a legacy. If your current accountant is only talking about taxes, you most likely have the wrong partner in place. In a winery, a real power comes from understanding true cost of goods sold, margins by channel, inventory value and movement, cash tied up in barrels, bottles, and cases, and accrual-based performance, not just bank balance. Yes, you do need to plan your tax strategy, but you need to first make good business decisions. Many CPAs are balancing both tax and accounting services. That means priorities compete. Attention is often pulled to where deadlines are loudest or revenue is highest, and frequently that is tax season, not the day-to-day winery performance. This does not mean a CPA cannot serve wineries well. It means that a dedicated operational accounting partner often provides greater clarity, accuracy, and insight in long-term value. Your winery does not need a form filler once a year. It requires a strategic partner all year round. They do not understand the wine industry. This is a tough one. The world of accounting has plenty of space for generalists, and they can add value to your business. But the wine space is complicated. It's not just retail, it's not just manufacturing, it's not agricultural, it's all of them. And on top of that, you have a regulatory layer that makes it extra complicated. You deserve a partner that understands the industry as well as the nuances that come with the accounting. This will give you better information to make better decisions. Generalists can still be competent, but competence is not enough in a complex industry under margin pressure. You need a partner who's actively invested in the wine space, stays informed on industry trends, participates in the community, and is trusted by others in the industry. That insight becomes a competitive advantage for them and for you. You are more confused than confident. This is a simple test that every business owner should do with their current accounting partner. When you review your financials, do you gain clarity on performance, confidence in strategy, direction for decision making, and insight into what needs attention? When you talk to your accountant, do they know what is going on in your books, and are they able to answer your questions? If not, it's probably time to find a new partner. You don't need a new accountant because you're frustrated. You need a new accountant if your current one is limiting your winery's visibility, efficiency, security, and strategic growth. Modern winery accounting is about operational excellence, accurate industry-specific data, strategic planning, and forward-thinking insight. Anything less is not just underperformance, it's a competitive disadvantage. If you're a winery owner or operator and any part of this video feels uncomfortably familiar, do not ignore it. Visibility, margins, cash flow, compliance, and long-term value are too important to leave with the wrong partner. Now is the time to ask the simple, critical question: does my accounting partner actually understand my business, or just processing transactions? If any of this feels true, it is now time to go and find a new partner. You and your business deserve the best.